Welcome to China Tech Talk, the weekly discussion of technology and startups here in China. I am John Artman, editor-in-chief of TechNode, and as always, I'm joined by Matthew Brennan, founder of China Channel. So this week we are talking with Zennon Kapron, founder of Kapron Asia, and we're talking a little bit about fintech and peer-to-peer lending in China. And it's funny kind of how these conversations go, because initially we thought to ask about some more detailed things, and specifically about a lot of these fintech IPOs that are happening in China and some of the regulations around that. But of course, in order to give you guys a better understanding, we started from the beginning. What is fintech, and then we just kind of went on about mobile payments and about kind of the financial environment here in China in general. So it was a fascinating discussion.
Yeah, Zennon really knows his stuff. I think his company's produced some pretty nice reports in the past. Maybe we could link to one or two of those in the show notes. And yeah, for fintech, there's so much to talk about when you're talking about China. And Zennon's been on the ground here for a long, long time dealing with this area. So it's unsurprising we started going off in different areas. But it's all good stuff. I think he's got some viewpoints that we haven't had on the podcast yet, and some really interesting tidbits there. So yeah, I think this one's a good one, and it's a nice complement to the earlier one we had from Dean Rong as well. So I think those two go quite nicely together.
Yeah, I completely agree. And he touched a little bit on Bitcoin, and I had to bite my tongue a little bit because I knew that if I asked him more about Bitcoin, that it would just be a rabbit hole. And I wanted to talk about fintech. So definitely we need to get Zennon on again, because I think he has a very interesting take on cryptocurrencies and Bitcoin, very much in opposition to Neil Woodfine, who we had on a while back. And I think that I think perhaps they both have a similar opinion when it comes to the recent ICOs, but at the end of the day, they're very, very different viewpoints about Bitcoin and in cryptocurrency. But yeah,
you want to recreate that panel you did at TechCrunch in Shanghai.
Oh no, I don't. Right? Well, there's no need to recreate it, because the video is going to be up very, very soon.
Oh,
so okay,
we should put that in the show notes.
That'll be very interesting.
That was really good. That was a highlight of TechCrunch. One of the highlights.
Yeah, it was a lot of fun. But with that, we give you Zennon Kapron talking about fintech and peer-to-peer lending here in China. Well, Zennon, thank you so much for taking the time to join us today.
Thanks for inviting me. Happy to be here.
So the first question that we like to ask our guests when they come on for the first time is to give it a little introduction. And in particular, what's your China story? How did you get here, and what are you doing now?
Sure. So I'll give you a brief background on where I'm from and everything. So I was born in Canada. I grew up in the U.S. I studied computer science undergraduate in the U.S. and worked for Citibank in New York, and then was in Europe for about 5 years for them, and always on the technology side. So when I left the bank in 2003, I was the head of technology for Citigroup in Portugal. So basically looking at, fintech at that time was financial technology, and basically anything that plugged into a wall in the bank was part of our remit. I left Citibank in 2003 and went back to do my MBA. And when I finished my MBA in 2004, I went to INSEAD in France. I was looking at places where I wanted to be, and I had already worked in the US and in Europe. So I wanted to move to a more emerging market, and definitely Asia was one of the areas that I was looking at, or the geographies that I was looking at. And so just a really good opportunity came up with Intel, looking after sales and marketing for the financial industry in Asia. So basically, how did we take an Intel chip and sell it to a bank? And they gave me the choice of where I wanted to be in Shanghai, Beijing, or Thailand, in Bangkok. And I just felt that around that time in 2004, so just over 13 years ago, the opportunity in China was really huge. Everybody was talking about it at business school, and so it was really something that I was interested in learning about more. And I had quite a soft landing into China, because I got the job with Intel and selected Shanghai, so I had a job as soon as I landed on the ground, even though I didn't have any Chinese. And so I did that for a couple of years, and then Intel's focus shifted away from the financial industry, and because that was my expertise, I decided to set up our business today, which is called Kapron Asia. And so that was set up in 2007. And basically what we're focused on is helping companies understand what's happening in China and Asia in the financial industry, and now more specifically in financial technology or fintech. And so that was set up in 2007. And we've grown since then. Now we have an office here in Shanghai and an office in Singapore, and cover most of the Asia region with our research and strategy. And so that really covers banking, payments, capital markets, and of course, we'd be remiss about leaving out cryptocurrency and Bitcoin. So we've been covering that for a couple of years from about 2013 here in China as well.
It's kind of funny to hear you say that all the way back in 2004, people were talking a lot about China. Because I was just in Italy a few days ago, doing some mentorship with startups on China market entry, and I was a bit surprised to find out how little people actually know or care to know about China. And so even looking back in 2004, that was I'm a bit surprised to hear that it was a hot topic back then.
Yeah, and I think everybody comes to China at a different point. I mean, even today, China is a hot topic for most people, and potentially even more so. And I think there's no right or wrong time to come to China. I think it's all at different points of its development. But certainly, I mean, seeing everything that's happened in the past 13 years, I've definitely gotten a crash course on just about everything regarding economics and development and industry that China has had to offer as it's gone through this amazing growth spurt.
Yeah, and it's too bad the podcast isn't expat stories or something like that, because I think it'd be fascinating to hear more about your experience, kind of watching China change. But this week we're talking about fintech. Maybe we can do. Hey Matt, that's an idea for another show we can do at some point, maybe.
Okay, we'll write that one down. 13 years in China.
So
that's exactly the amount of time that I've spent in China as well. Actually, it's quite a coincidence, but yeah. Sorry to interrupt, John.
The first time that I came to China was in 2004, actually. So we're all in the same boat to a certain degree. But anyway. So this week we're talking a little bit about. No, I say a little bit. We're talking about fintech and fintech IPOs coming from China. Specifically, most of them are happening in the U.S. But before we really kind of jump into that topic, I want to take a step back and so Zennon, how do you define fintech? What does fintech mean to you?
Yeah, it's an interesting question, and I mean, technology and finance have been forever intertwined. So as I mentioned before, I worked at Citibank, and Citibank was was the first company to launch an ATM, and so that was potentially people's first interaction with any kind of technology from a bank beyond kind of swiping a credit card. And so technology and finance have always been kind of hand in hand. I think what makes fintech different, and certainly this kind of fintech renaissance that we've seen over the past couple of years, is the intersection of finance and technology in a way that disrupts the standard business models of financial institutions or banks or the industry in general. And so I think when you look at, and we'll get into this in more detail, but when you look at peer-to-peer lending or consumer finance or mobile payments, it's really changing the nature of the way that individuals, small, medium enterprises, and corporates engage with their financial provider. And I think that for me is the key difference in what really separates this fintech from just standard financial technology.
So to your mind, you mean it has more? It's more to do with
disruption,
consumption, but like consumer-facing banking.
Well, I think that is the one that's most evident because we're consumers here in China as well. So when Alipay launched and when we use Alipay, those are the systems that are, obviously most relevant to us. There's a lot of things that are happening on the background within the banks as well that either for their corporate banking, their commercial banking that's more, banks dealing with larger companies, or within banks themselves, usages of blockchain and things that may not be evident to the average person on the street, but are certainly part of what's happening within fintech as well. So I think the retail aspect is more obvious and more relevant to the average person, but certainly is just one part of everything that's happening within fintech.
So I guess, I mean, so the last couple of years, I mean, you mentioned blockchain and a few other technologies. So for you, what would you say? Maybe this is too difficult a question, but what would you say has been the most impactful technology that you've seen come through in terms of disruption?
I think the mobile phone is probably the biggest impact at the moment, and I think I say at the moment because I think a lot of these things like blockchain and AI and machine learning and robotic automation, I think those kind of things haven't really become, well, they've become mainstream in terms of that the banks are talking about them, but we haven't seen the real impact of a lot of these technologies. So I think, in my mind, the mobile payments and everything that's been enabled by the mobile phone and the shift of retail users to use their mobile phone as their primary financial device has been the most disruptive force that I've seen, certainly so far. And that's not just limited to China. I think China certainly is an epicenter of everything that's happening in fintech globally. When you look at the valuations, the value of the transactions, the penetration rates of these platforms in China, it's really above and beyond anywhere else. But this is happening all around the world. That the mobile phone is changing the way that people live their lives.
Yeah, and it is funny because I was in Italy last week. I just got back in a few days ago, and it's always a bit painful for me to travel outside of China right now because everything can be done through the phone. And I don't need to carry cash very often. And if I don't have cash, I can use my credit card. But what I found in many cases was that, number one, obviously I can't use WeChat in most places. But then even then I can't use my credit card in a lot of places. A lot of smaller stores or smaller restaurants just will not accept credit cards. So Zen, why do you think that China is in a sense so far ahead, or at least been so fast to develop in this area, and the rest of the world is been a bit slower?
Yeah, so I think there's a couple of different factors for that. And the first and foremost is the consumer base. So, I mean, when you look at China, about 70 to 75% of the people in China have a smartphone. So smartphone penetration is very high in China. And that's largely driven by the fact that China has producers like Xiaomi, like Huawei, that are producing very cheap but capable Android-based smartphones for the market here. And so it makes it very not easy, but a mobile phone is much more affordable here in China, even despite kind of income disparities between different countries. And so when you look at the stats, in a country like the U.S., if you talk about PC ownership in the U.S. would be about 80%, meaning that about 80% of households have a personal computer. In China, that's about 50%. And that's a reflection of the fact that the mobile phone is really the device of choice. So I think first, underlying all of this transformation in China is the technology penetration in the form of a mobile phone, because that provides the infrastructure that you can layer on these payment services and the applications behind that. Another thing that's really driven things here is the friction in existing transactions. So, in Shanghai, at least, if I go back 4 years ago, or even when I first got here in 2004, for me to pay my rent, I would have to go to my bank, take out the money as cash from the counter because I couldn't withdraw that much money from the ATM, walk it across the street and deposit it in my landlord's account, because there was no way for me to do a direct person-to-person payment at that time without filling out a tremendous amount of paperwork. Now today, of course, it's much easier. We use Alipay and WeChat Pay to pay rent and everything else, but even a couple of years ago, when you're doing a card payment in China, oftentimes it would be swipe, pin, signature. And that's what we would call, a heavy friction transaction, where there's a lot of friction. And so when you look at these platforms like Alipay and WeChat Pay, in many cases, they remove a lot of that friction. So I think the second factor would be the friction that was involved in the existing financial industry, and we could talk about that a little bit more in the peer-to-peer lending and consumer finance as we touch on that later on. And then the third thing is a regulatory approach that we call wait and see. So if you look at all of these new technologies like mobile payments, so payments in general kind of started off with Alipay in 2004. We didn't see licensing around payments until 2010, 2011. So that was nearly 7 years later. And then we only saw regulations around mobile payments last year and the beginning of this year. So, the government has taken this approach that, okay, we're going to see how these things go. And if it helps the industry, we'll let them grow. And then when we need to ring fence them, we will. And so we've seen the same thing, mobile payments, consumer finance, peer-to-peer lending. The government lets these things go. And then once it gets to a certain point that it feels that it needs to regulate to control the risks, it gets involved. So I think really, the mobile penetration, the existing financial services friction in the network, and the regulators were probably the three things in my mind that have really driven fintech here in China and created the opportunity for these companies to really disrupt the market.
Yeah, Zennon, when you were speaking there, something came to mind. I was thinking, I think you're probably quite in touch with how does the general banking sector in China think about this disruption? And because we often hear, okay, China's moving towards cashless society, and we get a lot of information from Alibaba and Tencent about how great it is. But we hear less about how the traditional banking sector feels about it and their sort of approach to what's happening to their industry, I guess.
Yeah, that's a good point, Matt. And we looked at the market in 2016, and so we calculated all of the payment fees that were lost to Ant Financial and Tencent. So basically looking at all of the transactions that would have gone across a traditional card network. And that added up to about $30 billion. So that is a huge chunk of money for the banks to lose. So that's money that would have traditionally gone through the card network and been paid out to the banks within that payment network. And to a large extent, when you look at mobile payments in China, the banks are a bit behind. We've had conversations with some of the banks that say, okay, look, we've kind of lost the game in mobile payments. So help us, entrench with our other businesses, with our wealth management businesses and the other part of our businesses that we can still hold on to. So to a certain extent, the horse has left the stable on payments, and people are so used to using WeChat Pay and Alipay that is the choice for many people. So, in certain ways, the banks are a little bit on their heels on this because it's, for a long time, China's banking industry was the most profitable banking industry in the world. And when you have fixed interest rates, it's very easy to lend at a certain rate and deposit at a certain rate and protect your margin. So you have these large state-owned banks that have tens of millions, if not hundreds of millions of customers that are relatively complacent because their business model is it's kind of protected with the fact that foreign banks are limited in what they can do here. They're lending to predominantly state-owned enterprises. So they have a nice balance sheet behind that, and that results in good returns in the market and in terms of profitability for these banks. And then these at the time, upstarts come along like Alipay and WeChat Pay and really change the market. So I think initially the banks were really caught off guard, but what we have seen over the past probably 2 years or so is the banks get more involved in fintech and really kind of copying what we're seeing in other markets. So if you look at Singapore as an example, DBS, the largest bank in Southeast Asia, has really embraced fintech. And so they have an innovation center. They've been partnering with startups. They've been doing a lot around that because they recognize that in order to protect their core business, they need to be engaged in this fintech industry. And I think we're starting to see that with Chinese banks now, especially with Ping An. I mean, Ping An is a great example. They have Ping An technology that sells its services not only to Ping An, but to other companies as well. They have a big data strategy. They have a blockchain strategy. So we are seeing certain financial institutions and banks get more engaged in fintech here in China. And I think over the next 4 or 5 years, we will see the impact of that as they're able to kind of maintain their market share in that space. But certainly at the beginning, I think they were taken a little bit off guard and suffering a little bit in terms of fees and data that they were losing to these third-party players.
Yeah, because I remember, when Alipay and WeChat Pay first became prominent, the People's Bank of China came out and said that QR codes are illegal. So it seemed that, this is back in 2013, 2014, that the government was slightly perhaps against mobile payments. But I'm curious, and so, it seems to me that in terms of regulation, as you said before, there is this kind of wait and see stance from the government, in part because my sense is that because perhaps sometimes these types of disruptions, these types of innovations might actually help them to implement policies that they could not otherwise. So, for example, getting banks to become a bit less conservative in their lending, or at least providing other ways for small and medium enterprises to get funding.
Yeah, and that's a great point, John. I mean, when you look at peer-to-peer lending in particular, I mean, that if you look at the wait and see approach when it comes to peer-to-peer lending, so peer-to-peer lending first started in probably 2007, 2008, at least online. I mean, peer-to-peer lending has existed in China for centuries in some form or another, but in terms of online peer-to-peer, it was really 2007, 2008, and then we only started seeing the regulation last year. And again, why is that? Well, shadow financing and off-balance sheet lending is a big problem here in China, and usury lending through local land sharks. It was very difficult for individuals or small medium enterprises to get access to capital and liquidity. So if you're living in a small town, your bank won't necessarily lend to you because they're lending to the state-owned enterprise. Where do you go to get that financing? And so a lot of people would turn to the shadow financing or loan sharks or kind of really usurious lending practices. And so peer-to-peer lending doesn't solve that problem completely, but it brings a little bit more transparency to consumer finance in China and lending in China. So I think that's why we've seen the government be a little bit more open for these kind of platforms, because they really help the industry along. And that's the same thing with consumer finance that we'll be talking about later. I think it provides it helps to solve some of the issues that we're seeing in the marketplace. Conversely, the government has come down very hard on Bitcoin, as we've seen over the past couple of months as well. Why is that? Well, in our opinion, it's because Bitcoin is a really elegant solution to a problem that doesn't exist. There's not much within China's financial industry that's solved by having Bitcoin here. Right now it's very speculative. So, the government is looking at that and saying, okay, here's a speculative instrument that could potentially hurt consumers in China. It's not in our best interest to let this thrive and grow within China. So they haven't made Bitcoin illegal, because it's pretty much impossible to stop Bitcoin, they have shut down the exchanges and made efforts on that side. So those are two good examples of peer-to-peer lending on one side. That wait and see approach is really, the government has let that market grow, whereas on the flip side, Bitcoin, which doesn't really help the industry too much, has been kind of shut down to a certain extent within the market here in China.
But with the mobile payments, I think it's got to a stage now where there is some regulation coming out, right? I mean, we've seen the clearinghouse system, I think it's called Wanglian, right? That the Alipay, and as you mentioned before, Alipay and WeChat Pay have all this data, and they're kind of hoarding it, and now the government's sort of like forcing them to go through this centralized system where potentially they'll have to share it later on. So how do you think the regulation for mobile payments is going to play out, and what do you think about that regulation also, Zennon?
Yeah, it's a good point, Matt. That Wanglian system is kind of a question mark in the industry, and I think the government got to a point that they felt that they needed to have a little bit more insight into what was happening in these payments. Now, what's still unclear, and at least from the regulation and what we've heard from the industry, is how much access or how much data will be shared. I mean, certainly the government will have access to the transaction amounts and who's making which transactions, which is fair enough. I mean, they have to control anti-money laundering, and as we know, over the past couple of years, these mobile payment platforms have been involved in money laundering schemes in Macau and other places. So they need to have a little bit of control on that. But certainly there is a potentially anti-competitive nature to this Wanglian platform, because all of the banks, China UnionPay, and all of these third-party players will connect into that. So who gets access to which data will be really interesting going forward. I think if it's government accessing the data, then it's not that big of a deal, and that's something to be expected. But if the data is being shared between an Alipay and, say, an ICBC, I'm not sure how happy the third-party players will be around that.
Right. But at the moment, it's my understanding is they're not sharing that data, right? It's just a set with the government.
Yeah, that's my understanding as well. I think they're required to connect into it, and most of them are. But so far there hasn't been any further shift beyond that.
So yeah, I mean, some of the things that you mentioned before, in particular, peer-to-peer lending and regulation is what we wanted to talk about this week. So when we're looking at a lot of the recent regulation from the government when it comes to peer-to-peer lending, it's actually most of it's coming after some fairly splashy IPOs. In particular, Tudian, which is a company that does peer-to-peer lending, started off doing mostly lending to college students, Alibaba Ant Financial is invested in them. They went public, and the day after they went public, they ended up getting a lot of criticism because they claimed, on the one hand, in order to follow local laws, that they did not lend to students. However, it's very clear that if you use Judian, that actually you can lend to students. So, what do you make of that, Zennon?
Yeah, and I think that's my understanding of how they really got initial traction was through that student lending marketplace side of the business. And I think a lot of these companies are really they're going IPO because I think other markets are finally paying attention to kind of what's happening within the tech space here in China. I mean, previously, you saw Alibaba, after they listed, the stock was down and wasn't performing very well in the kind of first year it was on the market, but then has grown substantially since then. So I think the market, to a certain extent, was clamoring for these Chinese IPOs. A good corollary on this is Dai, and so they listed at the end of 2015, and over the course of 2015, a lot of these peer-to-peer lending companies had ran off with money. So the peer-to-peer lending market in China wasn't seen as a very safe market, and the valuation of Dai when it listed was very low as compared to some of these latest IPOs. So I think the market has shifted, and people are looking for interesting things to invest in, and so I think that's really driven a lot of these IPOs. Certainly, the business model of a lot of these consumer finance companies like Judian really varies, and I think the government previously hasn't had the best handle on some of these companies. So many of them are licensed. There are a number of different categories of consumer finance companies. Some are called internet small loan companies. Some are completely offline asset-based finance companies. There's a lot of different tranches from this, regulated at various different levels within the government as well. So some are regulated on the national level, some are regulated on a provincial level. So I think the timing, of course, wasn't particularly good for Judian, and still isn't, because I believe their stock is still way down from their IPO price. And that's probably a reflection of the valuation that they had, a very high valuation. But at the same time, it's a recognition that some of these business models have been growing very rapidly over the past couple of years, certainly, but need to be a little bit more controlled and grow in a more stable and sustainable manner. So I think that's the government kind of putting its foot down around consumer finance in general, and unfortunately that came right around the time of their IPO as well.
So you think that the regulation wasn't so much a response to the IPOs?
It's very difficult to tell what happens behind closed doors in Beijing. There certainly could be something tied to that, but I wouldn't know enough to look that far into it myself.
Okay, so but looking at some problems in the peer-to-peer lending market, there have been accusations of aggressive debt collection, and when asked about this, Judian CEO said something like, "Oh, when they can't pay them back, we don't bother them," or something like that. So I mean, looking at like peer-to-peer lending, I mean, what do you think are some of the main challenges that these companies are facing and that the market is facing in general?
Well, I think the peer-to-peer lending regulation that we saw last year was very prudent, because if you looked at some of the practices that some of these peer-to-peer lenders were using a couple of years ago, it was really not sketchy, I guess isn't the right word, but unsustainable. The first time we looked into peer-to-peer lending, I was talking with one of my Chinese staff, and so we were going through one of these peer-to-peer lending platforms, and she was telling me, she was saying they guarantee the principal and the return. And so I said, what do you mean by that? And she said, well, if you put the money in, you're guaranteed to get the money back, and you're guaranteed to get a particular return on that money. And at the point, a couple of years ago, some of these peer-to-peer lenders were promising 14% return. And so when you're promising that you're going to give back all of the capital, and you're promising that you're going to provide a fixed return, something smells a little bit fishy in that case. And so, you had some of those practices happening. You had people that using the money to serve as deposits from mortgages in cities like Shanghai. So really the peer-to-peer lending market was on really shaky foundations. And so I think a lot of the regulation around that was designed to kind of tidy it up a little bit more and control what was happening there. And so I think the business practices of some of the peer-to-peer lenders, and certainly, at the peak we had over 3,000 peer-to-peer lenders in China, were a little bit questionable. And so many of them, over the course of 2015, there were about 700 peer-to-peer lending companies that ran off with money in China. So basically closed down and ran off with the investors' money. So, the industry at the very beginning faced a lot of challenges around that. And it's certainly getting better. And there are certainly companies within the marketplace that are, have good practices in place and, are able to monitor the risk at the same time, being honest and direct in what they're selling. So there's definitely a need. As I mentioned before, here in China, the peer-to-peer lending industry is slightly different than it would be in other markets, because in the US, if a consumer is using the peer-to-peer lending platforms in the US tend to be a little bit more consumer focused. So you're trying to pay down your credit card debt, or you're trying to make an improvement on your home. Here in China, the peer-to-peer lending, the borrowers tend to be more small and medium enterprises. So they tend to be those companies that need money to get through cash flow challenges on a monthly basis. So the customer base is a little bit different, but that fills that need within the market for lending for these small, medium enterprises and the individuals that really need the money.
Yeah, it's so then what do you think about the sort of, there seems to have been a change, at least in my observation, in sort of the Chinese consumer mindset about credit, about, borrowing money. What you mentioned at the beginning of the podcast, you've been here 13 years. Back when I was here, a decade ago, I would find it very difficult to think that now so many Chinese people would be comfortable being in debt and borrowing money. How do you see this change in society, and what has sparked this ability for people to accept being in debt?
Yeah, it's a really good point, Matt, and that's something that I've noticed as well. And we're doing a paper on this right now to try and map out how these segments have grown. Because if you look at any of these, whether it be credit card, as you mentioned, or consumer finance or peer-to-peer borrowing, the Chinese consumers, for what was for many millennia kind of a very cash-based society where cash is king, and they really cared about how much money was in the wallet and weren't spending beyond that, it's changed. I think the only thing that I can point to is kind of the availability of credit within the marketplace. So if you think about a number of years ago, there would be a lot of people selling credit cards. And so initially there were third parties that could sell credit cards, and they were basically just sometimes forging applications and issuing all these credit cards without really paying attention to who they were issuing it to. And usage of those credit cards was very slow at the beginning. And then we saw kind of a shift where the banks were encouraging spending on the credit cards a little bit more, and we've seen usage grow over the past couple of years. So the amount of money that people are putting across these credit cards and the balances that are holding. And it really is a shift in the mindset. And I don't know all of the things that have triggered it. I think it's one of those things that I always found strange kind of 5 years ago about why people weren't using their credit cards. Because, coming from America, I think when I was 16, I had my first credit card, and the amount of credit that the American banks will give me, even though I'm living in China, is really ridiculous. And that's, the American society is really based on credit, and people have come very used to it there. And now starting to see the vestiges of that in China as well, which is really a cultural shift in the way that individuals are looking at their finances. And like you said, the appetite for this credit is increasing, and they realize that they can have debt and can spend beyond what they have in their pockets.
Is it a healthy trend, do you think? I mean, you read frequently in different places that China saves too much, right? That America spends too much. Americans love spending money they don't have. Chinese, hoard their cash, and both of these are unhealthy habits. Is that your opinion?
Well, I think the numbers around China being a savings economy are a little bit offset by the corporates. So there's some information around that. I don't know, my statistics aren't so good, but I think a lot of the savings is not just the individuals, but a lot of the companies as well in the way that they invest. So I think certainly the shift away from the cash to credit is unique. And I don't, if we look at the US, I mean, there's a lot of problems with debt in the US, especially in the areas that are a little bit underprivileged or not as developed. So when you go into the rural areas in the US, kind of the understanding of debt isn't necessarily there. And so you have people that have a tremendous amount of debt on their credit cards and may have mortgages, et cetera, et cetera. And so, yeah, it is a big risk for China going forward. I guess the advantage that China has at this point is they've seen what's happened in other markets, and so they can use that as an example. And they're much more holistic in terms of their ability to judge credit as well. And so there's been a lot of talk about the social credit system here in China. And we all know that the number of transactions that we put across Alipay or WeChat Pay give them a fairly good indication of the way we live our lives, not just from financial transactions, but social interactions and all these other data points that they're able to capture. So I think it is a risk for China, but with the hindsight of seeing what's happened in the US over the past couple of decades and that incredibly rich set of data that they can pull from to judge individual credit, it may be okay for China. It may not be as big of a problem as it is in other markets.
So going back to IPOs for a second, I'm curious, and so this has always been a question that I've had. So why do you think most of these lending sites or these fintech companies are choosing to list in the States and not in Hong Kong or Shenzhen?
Yeah, well, I guess there's a little bit more appetite for these players in those markets. And I think the listing rules here in mainland China, I mean, sometimes the government is very hot on IPOs and sometimes it's very cold on IPOs. So it's challenging to list sometimes in mainland markets. And we saw from the Alibaba, I mean, Alibaba was originally thinking about listing in Hong Kong, but because of the share structure, it wasn't allowed to list on the Hong Kong markets. And so they moved to the US markets as well. So I think it's just kind of following the trend of many of these tech companies listing in U.S. markets, these tech or fintech companies, and probably using, although most of the fintech side of Alibaba is now pulled out into Ant Financial, certainly the reasonably successful, continuing IPO of Alibaba, at least after a year or so of being in the market, is fairly successful, and so I think they're kind of following in those footsteps and looking to list in overseas markets.
What's the relationship between where they list and what kind of money that they raise? I mean, so if they're listing outside of China, does that mean that most of the money is not going to be repatriated and it's going to be used somehow for their global operations as opposed to their Chinese operations?
Well, many of these companies, the corporate structure is offshore anyways. I think when you look at Tencent or Baidu, I think these are offshore companies, Caribbean companies anyways. So, how they handle the money and how they treat the money is probably somewhat no different than a multinational that needs to invest in China, invest in one of the subsidiaries in terms of bringing it back into the market. And in a lot of cases, I mean, these companies are raising a tremendous amount of money that they may not need immediately. So keeping it offshore or helping to fund offshore operations is also valuable as well. And certainly everything that we've seen from Ant Financial and Tencent over the past year or so in terms of their international expansion of their payment platforms, that money can be used towards those ends. So I think there's a certain amount of value for that, especially of what we've seen over the past 6 months with increased scrutiny from these from the Chinese regulators on companies that are investing overseas. Certainly, if you have the money overseas, then it's easier to use it once it's there rather than trying to get it out of China and into those markets. So that certainly may have been part of the considerations as well for these companies.
Yeah, definitely. Over the last year, we can see that the capital controls have gotten much tighter. But how do you think the Chinese government feels about what I think they're called VIEs? Is that correct? I can't remember what the acronym stands for. But how do you think the government feels about these companies which are basically incorporated? I mean, they're Chinese. Their headquarters are in China, but then they're actually incorporated somewhere else.
Yeah, and VIE is, I believe, it's variable interest entity, and the basic idea is just a foreign entity that has a contractual arrangement with a local entity to kind of manage that entity, and I think that's the structure that at least Alibaba had at the beginning and still does to a certain extent with the overseas listing. I think certainly the government would want to have these companies list domestically, but for whatever reason they've essentially let them go abroad, because I think if the government really wanted to force them to list in China, they could enact things to control that, but. So far from what we've seen, there haven't been that many limitations on where these guys can list and in which markets.
So we're looking at all these different IPOs, and I think that perhaps one of the most anticipated ones is Ant Financial. So Zennon, why do you think it's taken them as long as it has to IPO, and I mean, what do you think that IPO is going to look like?
Yeah, it's a good question. I think, well, the two big ones I would say were Ant Financial and Lufax, and both of them have been kind of delayed more than we would expect. I don't know all of the reasons behind it. I would assume they're kind of waiting for the market for the right time. It would seem that now is kind of the right time to do that. But yeah, they're to a certain extent, they don't really need the money at this point as well, because they're expanding very rapidly internationally, and so and the domestic business is obviously doing well. So in terms of where they would put the money once they raised it would be a big question as well. But I would expect that we would see some kind of IPO from them in 2018, and I think that's what investors are looking for from both Lufax and Financial.
And so you mentioned Lufax as well. I mean, are they delaying mostly because of the regulations?
Yeah, well, I guess there's a little bit around that, and similarly, I mean, with Lufax has very tight tie-in to Ping An as well, and so Ping An is obviously a large player in the market. So the considerations for that might be a little bit higher than some of these kind of independent entities like GDN that don't have a corporate connection necessarily with a large organization like that. So I'm sure some of those decisions come into it as well and are controlling when these guys are looking for overseas listings.
So as we get to the end, one of the kind of burning questions that I have is kind of, as an insider in the industry. So recently, microlender Dianrong, who we've mentioned before in this episode, we also interviewed their CTO about a month ago or so. It's a very interesting episode. They recently shuffled some of their leadership, moving their CEO and one of their other executives into positions on the board. So they're no longer executives, but the CEO has become the chairman of the board, and a few other moves, kind of basically moving the top out into the board, and then moving those right below them into those executive positions. So what do you make of this move? Do you think this has anything to do with recent increased government scrutiny?
That could be part of it. I mean, I think for a company like Dianrong, and Dianrong is one of those companies that seems to have weathered all of the storm quite well. And from everything that we hear from meeting with them and understanding their business model, they're fairly strong in terms of the team that they have in place. So I don't think of all of the peer-to-peer lenders, I think Dianrong certainly has been one of the more successful ones and one of the better run companies. So it could just be a natural evolution of the company that these individuals are moving out and moving into different roles. There could be something that is related to the regulations as well. But again, I think of all I think the reason that Dianrong would be under scrutiny would be because of the size of its customer base and its balance sheet more than anything else. So if you look at these peer-to-peer lenders as being kind of systemically important to the industry, they might be one of them, so they might be under a little bit more scrutiny, but it wouldn't necessarily be because of any bad lending practices or anything like that. So it's probably just a potentially precaution from the company itself as it's moving forward, and just a natural evolution of the company as well.
Yeah, and I highly recommend that listeners take a listen to the episode that we did with Ling Kong. It's really interesting to hear how they match borrowers with lenders. And all the technology behind all of that.
Yeah, that was a good episode. I like the part he was describing how Chinese, how they piece together a picture to assess your creditworthiness, right? And they have to get the data from all the different places. It just made me think we haven't really touched upon that, but this was like a huge topic that a lot of people were interested in. Like how does China, for all these micro lenders and stuff, how do they get their data? Are they how they protect the data, and is how they building their systems to assess creditworthiness? I think is a really, really interesting topic. So that was really good insights, I think. Is there any do you have any insights into that, Zennon, about how these peer-to-peer lending platforms, how are they treating the data that they have, and is there any sort of questionable practices being used, do you think, or is it how do you feel about that area, how they treat data in order to get sort of a picture of someone's creditworthiness in China?
Yeah, so I think that the idea of how these companies are using the data is really interesting. I mean, they are collecting an incredible amount of information. So I just think about my day to day as an example. I mean, I ordered online food delivery, I took a DD, I paid one of my staff their expenses. So, across those kind of 5 or 6 interactions with those platforms, I've given them an incredible amount of information about my life. So location information, spend information, preferences. And for me, to a certain extent, I believe that personal privacy is limited in the future. I think, 10 years from now, the idea of personal privacy won't exist because just all of our data will be shared in some form or another. I think that's just the way that we're going when we look at how much information we give up to Facebook or any of these other platforms. And it really comes down to convenience. So when you're using Facebook, you're able to connect to a lot of your friends and a lot of your coworkers and whoever else you want to connect to. And so you sacrifice that personal privacy to access that. And we did a study of millennials in 2015, and we interviewed 1,000 millennials in China, or surveyed 1,000 millennials. And we asked them a number of questions about their privacy. And so one of the questions was, would you be comfortable with Baidu using your search results to create a financial product for you? So Baidu did a couple of years ago create a financial product that basically took all of the search data, anonymized it, and created a financial product called the BaiFa 100 on the basis of that. What we asked was one step beyond that. So that BaiFa 100 index product sold out in 2 days. It sold out a couple of billion renminbi in 2 days and became one of the more successful wealth management products that Baidu had partnered with an asset manager to create. But in this other scenario, we were asking individuals if they were willing to give up their personal search information for access to a better product. And just under 50% said they would be willing to do that, which in my mind is kind of a clear indication that people are willing to give up a bit of their data to have access to something that's better for them, whether that be a product or a service or a financial product. So whenever I log into Ulama or one of the food delivery apps, it knows where I am. It knows where my address is. It gives me ideas. I eat a lot of salads, so it gives me recommendations of salads from other companies that can deliver salads. So this use of data is really prevalent across all of these platforms and will only increase in the future. The privacy of that data is really critical for these companies. And what we have heard so far is that the most important things for all of these companies is the customer data. And in terms of when they use the customer data outside of the customer themselves. So if using that example about the salads, if they know that I like salads, they can use that data to push more salads in my direction. But they can't use the fact that I'm connected to my wife on a social media network, and they can't use that information to push salads to her as well. So they can use overall trend information about how many people are ordering salads in Shanghai and how many people in my area, but they can't use these kind of personal identifying characteristics of my transactions when they're advertising other transactions. Now, how much of that is actually followed or not is a bit unclear because the big tech companies are obviously quite private in terms of what they do. But one would hope that in the future we won't have any problems with that. But it's certainly something that within their governance is very important, and it's important for the regulators to pay attention to that as well.
Well, great. I think that's about all the time that we have for this episode. But Zennon, again, thank you so much for taking the time to tell us about the current environment when it comes to fintech and peer-to-peer lending in China.
Thank you for having me. It was a pleasure to chat.
And to our listeners, if you enjoyed this episode, we would really appreciate it if you left us a review on iTunes, or if you are on Overcast or Pocket Cast, you can just tap on that star button, and it will recommend us to your network.